Hi friends, this is going to be possibly the most important video of 2025 from my perspective because right now the global equity world is going through a big turmoil and this turmoil is likely to continue across the 2025. For example, have a look at my screen. You see Nasdaq index, which is a US index. What you notice here is that up until February, Nasdaq was hitting all-time high of 22,000 level, and all of a sudden in the month of March it has come down by 22%. Now this is not a joke that within a month, our index is down by almost 22%. So what we are really witnessing here is a huge volatility even at index level, let alone the portfolio level, where all of a sudden you see your portfolio down by 5%, 8%, and all of a sudden you see partial recovery by let's say 2% and 3%. This is not just about the Nasdaq index. If I show you the Chinese index, Hang Seng index, you will note again, it was on a massive bull run up until February, and all of a sudden in the month of March, it has come down by almost 19%. Again, an index falling by 19% within a month of duration is telling us that there is a huge volatility in the equity market. If I show you the data across the emerging markets, what you will note very quickly is that in the last 1 month, if you see, most of them have gone to 8%, 9%, 14%, 10% sort of a hit because of what is happening in the world economy that I want to present to you. And lastly, if you look at Indian stock market is no exception. We are down by almost 16% as of 7th of April. But more importantly, Indian stock market is down from last almost 6 months now. So we are seeing a prolonged downtrend in the stock market right now. But if you see, for example, in the month of February, Nifty gave a short rally, around 5 to 6% Nifty gained all of a sudden. But again, in the month of April, it has come down and it has gone to almost low levels of 21,900. Also on 7th of April, we saw even bigger swing where Nifty opened with a gap of almost 5%. Nifty opening with a huge gap of 5% tells us that volatility is going to persist in the coming days. So the billion-dollar question is that are markets likely to remain under pressure? Can we see even more deeper corrections in the equity markets? That's number one. And second is, therefore, what should investors do? Should they go and buy this dip right now? Should they wait and hold off? Should they sell off everything and sit on 100% cash? And lastly, third point is, how do we as investors know when is a good time to buy in the market? That's what precisely I want to speak about in this video. Every word I speak will be data backed. It is going to be a super interesting, full of data analysis video. If you're a serious investor, this video is for you. Before I start this video, a big shout out to the partners of this video, Odoo. If you're a business owner and want to grow your business, then Odoo is a wonderful all-in-one business platform that comes with more than 45 applications simplifying and automating your business operations. For example, one such app is their accounting app. By using this app, you can handle all your finances in one place, be it your customer invoices, vendor invoices, banking reconciliations, business tax returns, and much more, all of this in one place. By using Odoo's AI-powered invoicing feature, a lot of invoice data gets filled automatically. Therefore, it reduces data entry time and efforts for your teams. So you can create customer invoices in just few clicks, and Odoo will follow up with customers in case they do not pay on time. Odoo's bank synchronization ensures that all your transactions are imported automatically and your finances are kept up to date and error-free. With 70 plus localization packages, Odoo accounting is tailored for your country. Odoo accounting app allows you to transact in global markets using international currencies with exchange rate calculations automatically. You can create detailed reports such as balance sheets, P&L account, cash flows, etc. in just few clicks. And the best part is that your first Odoo app will be lifetime free with unlimited hosting and unlimited support. If you want to transform your business, check out Odoo. The link is in the description and in the pinned comments. With that, let's get back to the video. So the first question we are going to try and answer is that are we likely to see deeper correction in 2025 when it comes to Indian stock market as well as US stock market? Because this is extremely important point for investors. If we understand this point, then the way we invest in Indian stock market or US stock market is going to entirely change. So please watch next 2 to 3 minutes without skipping. What you see on my screen is the chart, the famous reciprocal tariff chart that Trump announced in the beginning of the month of April. Now, what we see on this chart is that a lot of tariffs have been announced by Trump without having any proper logic or calculations. Simply, he's gone with what other countries are charging US. So, for example, if China is charging 67%, he's taken a half of that, which is 34%. So, there is no rocket science here. This is literally, they have taken the current tariffs by other countries and have divided it by 2. But more importantly, these tariffs are not stable. These are very very volatile. For example, just this morning on 8th of April when I'm recording this video, Trump again announced that he might levy additional tariffs on China. So the point is that this 34% is also not stable. It is entirely possible that in the next few weeks of time, majority of these tariffs may change. They may go up, they may come down, they may remain constant. We don't know that. There is a huge volatility in these tariff rates, and therefore there is likely to be a volatility in the stock market as well. Now this morning when Trump threatened China to say that I may hike these tariffs even further, what did China say? They came back with a very strong response that they said we are not going to be blackmailed by you. This is the beginning of a trade war, and trade war is not good for global economies, and more importantly, stock markets do not like uncertainties. This trade war is just starting to begin, and therefore in my view the corrections that we have seen in the month of March, it is just the beginning for now. Now the second point I want to make about this chart is that a lot of people say that Trump is just threatening other countries. He is eventually going to back off. I do not agree with that. For that, have a look at this chart. What you see here is the historical perspective on the US tariffs, and very important point you will note here is that back in 1900, 1914, 1924, if you go back that time, 50 to 90% of US federal income used to come from tariffs. Look what happened in the last 100 years or so. You will note that the tariff contribution to US income has gone down crazily to almost 1.57% in 2024. So US tariffs have come down drastically in the last 30 years or so. And guess what Trump is trying to do? He's a businessman. He's trying to reverse that pattern. And as you see here in 2024, 2025, what he's trying to do is trying to take these tariffs back to higher levels. Now, why I say that Trump is not going to back off from these tariffs? Because if you look at the data, only 77 billion US dollars were collected in tariffs in 2024. Now, if you look at the reciprocal tariff chart that I showed you earlier, it is projected that this 77 billion dollar can go up to 530 billion dollars of tariff if those tariffs get applied to all the countries as stated in that chart. So Trump's main agenda point here is that he wants to collect more and more money for US government because the US government debt is piling up hugely, and what he promised in his election campaign was that he is going to reduce taxes on American businesses, on American consumers. Where is he going to find the money? He did announce that he is going to collect a lot of money using tariffs, so he is not going to back off in my view. And also equally, China is not going to back off. There is going to be a trade war. Now where they settle, whether at 34% of Chinese tariffs or 28% or 20%, I do not know, and therefore there is an uncertainty in stock market. Chinese stock market is likely to remain under huge pressure throughout 2025 in my view. US stock market is likely to remain under huge pressure in 2025 in my view. Indian stock market is not going to be an exception. Again, I'm going to present you more data to drive home the point that 2025 is going to see deeper correction, and also it is likely to be volatile. One day you will see market going up and another day you will see market going down. My last point on tariffs is that a lot of experts are projecting that tariffs have a huge influence in whether US is falling into recession or not in 2025. Have a look at this article from Nilesh Shah, Managing Director of Kotak AMC. He tells us that there is a history that tariffs have always preceded the recessions. So the possibility of US recession has gone up due to these tariffs. But even if you forget about tariffs for 1 minute, US is actually falling into recession. I'd covered 4 macro factors in this particular video that you're seeing on my screen, where I talked about, irrespective of what happens to tariffs, US economy is slipping into recession because of the 4 macro factors that we are able to see right now. For example, the GDP now data I talked about in this video, where US economy has contracted in the first quarter of 2025. I had explained the concept of inverted yield curve and how that associate with the US recession, talked about unemployment data, fiscal strength, many other macro factors. It's a must watch video for 2025 because you really need to understand what are the chances of US going into recession in 2025. And the reason I say that you need to care about US recession is because of the stock market impact. Allow me just 2 minutes of time. I'm going to run you through some mind-boggling data about US recession, impact on Nasdaq, the stock market in US as well as in India. So have a look at this chart and you will see that in the recession of 2001 dot-com bubble, Nasdaq fell by almost 83%. If you look at 2008-2009 financial collapse followed by a recession, Nasdaq dropped by almost 53%. If you look at the COVID recession that lasted only for 2 months in US, Nasdaq fell by almost 29%. I'm not sharing this data point with you to scare you. My intention here is to bring some reality check right now in the stock markets, because US recession possibility cannot be ruled out in 2025. I'm not saying that there is going to be 100% chances of US recession, but the possibility of US recession has gone up because of tariffs and because of contraction in the GDP for Q1 in 2025 for US. And as a result of all of these, Nasdaq has crashed by almost 21% in the month of March. And the natural question is that can it fall further? In my view, it can absolutely fall further. I cannot tell you how much, but there is a huge possibility that it can go further down to almost 50%. Now, why I say that? Mainly because of valuations of Nasdaq as an index. Have a look at the Nasdaq PE ratio and how it has behaved during the US recession. So if you look at the 2009 recession, you see the gray bar here. The PE ratio of Nasdaq fell below 15. And guess what? For the next 6 years, it remained below 15 PE. That's the damage recession did to Nasdaq for 6 years back in 2009. If you look at the COVID recession in 2020, it was a mild recession. And as a result, the PE ratio of Nasdaq was somewhere around 18, 17. It was definitely below 20. And right now we are sitting at a 31 Nasdaq PE. The fears are still out there about recession. Can this PE drop from 31 to 15? Entirely possible. And that's why I say it is entirely possible. We cannot rule out Nasdaq can definitely fall up to 50% in my view in 2025. I'm not predicting here. I'm not speculating here. I'm simply using what the past has taught us, using that data to tell us that we cannot rule out this possibility in Nasdaq. Okay, Rahul, why are you talking about Nasdaq? Why are you not talking about Indian stock market? Well, I'm now going to talk about Indian stock market because Nasdaq and Indian stock market has a huge correlation during the recession period. Have a look at my chart. What you see here in the COVID period is that pink line is the Indian stock market Nifty, and the candle chart pattern you see here is the Nasdaq. And if you compare in 2020, what happened during the COVID US recession is the Nasdaq fell by almost 28%. Indian stock market fell by 37%. If you go back to 2009 recession of US, Indian stock market fell by almost 59%, while Nasdaq fell by around 53%. So during recession, if US stock market crashes, Indian stock market has come down to a great extent in the past. That is likely to happen or not in the future. I'm not a god to tell you, but the past data tells us there is a high correlation. Therefore, we really need to be careful and watch out for US recession in 2025. Moving on to second key point, that given this broader context, what should investors do here? Should we go and buy the dip? Should we sell off everything and wait for recession to hit? These are some of the open questions that everybody is trying to find answers for. In fact, I did a detailed post on my YouTube community talking about what the market situation is likely to be in the next 3 to 6 months. And the key takeaway that I want you to understand from this post is that a lot of trade deal negotiations are going to happen in the next 3 to 6 months. Some of these will fail miserably and some of these will succeed to some extent. For example, recently it was in the news that Israel's president is visiting US president and they are going to talk about the tariffs. Although Israel does not have any tariffs on US, but US had announced some tariffs on Israel and therefore they are going to talk about it. And very recently it was in the news that Vietnam got really scared and they said that we are going to drop all the tariffs from US companies. The point is that in the next 3 to 6 months, a lot of these trade deals will happen. A lot of negotiations will be held. Some of these will fail, some of these will succeed. But the mega point remains that the markets will remain uncertain. There is likely to be huge volatility. And if we get closer to US recession, we are likely to see deeper correction across the globe in the equity market. And that's the time, in my view, to make wealth. Because if you look at this chart, what you see is two investors. Investor number one, who invested at around 16% fall during COVID, their wealth today would have gone up by 114%. And there is investor two, who did not invest at 16% fall. They invested when the market was down by around 38%. Their wealth went up to 188%. There is a huge difference between 114% versus 188%. Again, I'm not saying that you try to find out the bottom. I cannot find bottom, you cannot find bottom. But in my view, there is likely to be deeper correction in Indian stock market as well as in US stock market. Therefore, the good strategy right now, in my view, is to A, hold the cash. Throughout 2025, my strategy is to have minimum 20% cash sitting idle, ready to invest in case there is a plunge in the Indian stock market. And if I find some fundamentally strong stocks taking a beating, that will be time to deposit that 20%. But this 20% is minimum. Throughout 2025, there will be a lot of economic changes that are going to come our way. What we need to do is absorb that commentary, be flexible with this cash. Closer we get to the US recession, this cash should go up. It should ideally be 30%, 40% of your portfolio, because that is where you make wealth for yourself. When US recession hits the global economy, we are likely to see deeper corrections. Again, I'm not trying to scare you. I am presenting you point of view which I am able to see right now from a macro perspective. It'll be too late to talk about it when actually US recession hit. I'm sort of giving you this analysis very, very upfront. Early signs of US recessions are there. Likelihood is there. Therefore, we need to hold the cash as much as possible in 2025. Don't be in a hurry to buy every dip, because 1%, 2% dip is likely to be the volatility or the nature of the stock market. I'm talking about here when the stock market gives you an opportunity where it is down by another 15%, 20%. Small cap might come down big time. Mid cap might come down big time. Your favorite stocks might be down by around 15%, 25%. And if you have the cash at that time, that will be a huge relief for you, because that is where you're likely to build wealth. Moving on to third point, which is how to go about finding out whether it is a time to do bulk buying or not. Let me take an example of Nifty 50 as an asset. You can apply this concept to any other asset. It could be individual stock, it could be indexes, it could be mutual funds, whatever you are investing in, you can apply this concept to every asset. What you see on my screen is Nifty has fallen by around 15 to 16% from its peak. And typically what people do is they will say that Nifty is down by 15%. You know what? This is a good opportunity because it can go back up to 26,000 level. I can already see a 15% upside from here, but that is not the way to look at bulk investing. Do you know that Nifty will not fall more from 15%? Can it not go down to 18%, 20%, 22%? Absolutely, it can make new bottoms. It is entirely possible. Therefore, you do not look only the percentage downtrend in a particular asset. What do you need to do is look at the valuation in addition to the percentage downtrend. For example, if you look at the Nifty, it is at around 20 PE right now. And if you go back to the 5-year history, you will know that the low PE in the last 5 years has been around 18.92. So if the Nifty is at around 18, you know that from a valuation perspective, it has almost hit the bottom. Therefore, this becomes a bulk buying opportunity in my view. I look at the valuation because please remember, in the longer term, assets will come back to its mean valuation. Therefore, we need to look at valuation in addition to the percentage downgrade. A lot of people are making this mistake of looking at just the percentage fall. That is not the way to go about. You have to look at the valuations to decide whether it is a bulk buying opportunity or not, because the valuations will reward you over a long period of time. I teach a lot of these concepts through my YouTube community. If you are not yet a member, I request you to go and explore this community. You are going to learn a lot. I post almost on daily basis covering a lot of assets, for example, mutual funds, stocks, ETFs, etc. You're going to learn a lot. The feedback of this community has been excellent. Simply go to my channel, find the join button and be my guest, or you will find the link in the description or in the pinned comments. Lastly, if you're a business owner, do not forget to check out Odoo. The link is in the description or in the pinned comments. With that, I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.